back with Wall Street Confidential with Jim Cramer. Jim,
Simon, good to see you, man.
Let's talk about the employment numbers.
Sure.
Great numbers.
Yeah, you know, what you really want at this stage is you want to believe that we're not falling off of a cliff, but you don't want it to accelerate so fast that you think that the Fed did the wrong thing, because the Fed's credibility is on the line here. So I mean, this number actually fit that bill. It's
5%.
Yeah. I mean, it's kind of a reason why you don't want to give up on retail. It's kind of a reason why maybe we're at the trough in housing. At the same time, it doesn't say that you have to sell U.S. Steel. So I look for numbers that are not zero sum. I mean, the worst kind of numbers are, oh, okay, well, it's really good for Anadarko and for Freeport, but I've got to sell Citi and I've got to dump Goldman. And this was a number that allowed you to be in many camps and still buy. We don't get these very often. So when they happen, we have to recognize two things. One, aha, that's why we've been going up, because people get it. And aha, you haven't missed that much, because there could be more between now and the next number. And, you know, when I look at things to try to figure out what to do, the most treacherous time is to say buy stocks. Because when you get the wrong numbers, many of the stocks are going to be the wrong stocks. This was a buy stocks number, and I think that there are foreigners that are realizing that. I still don't see any money coming in domestically. It is incredible how hated equities are in this country.
That's a bullish sign, though, right?
Yeah, I think it is. Now, a lot of people are saying, Jim, you take that rap, but it's been hated. So, like, that might have had you buy stocks in October of last year. But, you know, I look at it as a continuum and say, well, listen, there's only so many months that it can be hated that it's going down.
Okay.
It's a durational issue, and you can't hate equities forever. Now, I know that the thing that has happened that's most important that I see is dividend growth, safe dividends being high.
And big cash flows.
And big cash flows. Verizon and AT&T. AT&T was at 33. It's at 40. Verizon was at 34. It's breaking through to 40. You know, these were what people should have been looking at, 5% yielders. We pounded the table on, but a 5% yielder, that's a yield that's higher than bonds with growth and with cash flow was and remains a pretty decent story here.
Excellent.
Thank you.
So Jim Cramer, bullish on stocks.
Yeah.
Wall Street Confidential. Stay tuned for more.